Hello, Warriors. Let's have a good week. Brock, Hugo. Who else is here? How are you? And Ryan's here too. So let's take a look at what's going around. Yen really took off. I thought we were going to have a 3 drive, and we've ended up with a throw over. Here it is.
Morning, Dale. You all right?
Yeah. Hi. How are you today, Ryan?
Yeah, all good, mate. All good. Very good.
Okay. Simon, haven't seen you for a while. Laura, what do you think? I thought that we might stall at this line. I actually had to redraw it, but looks like a throw over on the end.
Yeah, I thought 112.50 was a number I had for a long time ago, and through there without a second look, wasn't it?
Yeah, and I don't know. I don't have any pre-market on the 10-year. A little last night, but right now it's showing it down 1 from last night. But this is not as strong. The 10-year yield chart. Look at this chart compared to the RSI. I'm talking about compared to the yen, blew it out. See,
yeah,
blew out the divergence. So guess you have to buy pullbacks to 12.5 to 12.20, and if you're bearish, you have to wait for closes back under here. That it was a false break. Well, the throwover would be negated if that happened. I'm a little surprised gold isn't weaker, especially after this Friday where it came off a ton after the NFP. Silver's a little weaker than gold, but this is supposed to be a headwind for both gold and silver with yields. And I still say, even though we came off the 1780, that it's not acting bad. I don't feel like I have to buy it here yet, but unless the yen is just going to keep blowing, there have been long-term counts, and I'm wondering if you have it, Ryan, where people are talking like 120 yen.
Yeah, it always starts,
122. Huh?
Yeah, it always starts, and as soon as you get a big rip in the yen, it does nothing
Yeah.
for months. You get a big rip, and everyone starts getting excited about it. But it's to me today, it's looking like a yen thing. I mean, obviously yields are up around the the other sphere, Europe and whatnot. So it is a yield story, but it's all yen today. I mean, euro's not moving really.
Yeah.
Cable's not really moving. Aussie dollar's up a bit, but not really. Yeah. CAD's not doing much. I'm also wondering if perhaps we're seeing a bit of option activity here, because we mentioned last week there's some clear sky in dollar yen in the options, above 113. I posted it in the room this morning, the options picture over the next 3 months to the end of the year, and there's virtually nothing above 113. So what can happen is that options traders get left behind, and they've got to cover their short gamma, and they end up chasing them. And as the levels break, I mean, there were big barriers at 112.50.
Right.
They went, so that can cause people to chase a bit more, cover their gamma and everything. So it could be that this latest thing is a bit options related, but I'm waiting to get a bit of confirmation on that.
Plus, it's up with risk off today.
Yeah.
I drew this line over the weekend when I was talking to some traders and said that this is pretty important in the S&Ps. This was, from the weekend, and it came back and tagged it. So, like most technicians, I'm always surprised that when my lines get a reaction, but under 43.60, 43.55, there's a shot for new lows, and the NASDAQ issues are much weaker, almost twice as weak. So, if you wanted to try and scalp the long side at any time this week, the strength is in the S&P, not the NASDAQ, which, most of the mega caps do not like higher yields. So that's happening. How about a new high in oil up here?
Yeah, it's cracking on, isn't it? Yeah.
Yep.
And what's CAD doing? CAD's doing nothing. You would have thought CAD would have, we know they're closed today. As John just went, they're closed for their Thanksgiving, but FX market's still open and the correlation's still there. What is it like for Columbus Day over there? Is it a day people take off, or is it business as usual?
I think the schools might be closed, but I don't know if the banks are closed. So, it used to be a national holiday. It's not anymore. The Knights of Columbus celebrated quite a bit.
Yeah.
So, but it's not what it used to be in the prehistoric days when I was a kid. We used to get a day off. So, anyway, anything else grabbing your attention?
No, I'd say that stocks are so in Europe. We have, for the pound, there is a bit of risk coming in now because we had two Bank of England speakers, Bailey and Saunders, who Saunders particularly was pretty hawkish, sort of nailing the date as December and February for a possible rate hike. And I'm wondering that I thought the pound would react a bit more to it when the UK got in this morning, but it hasn't. I'm just wondering if the market's questioning whether the bank is sensible in raising rates or looking to raise rates. I can understand them raising by 15 basis points to get back out of the emergency stuff, but anything more, I don't think we're going to get close to a look at that until Q1.
Ryan, I think that's what the markets are probably thinking. 15 basis points to take us back to 0.25, which really isn't that much. And good morning, by the way, everybody.
Good morning.
Good morning, mate.
Good morning, Giselle.
Yeah, I'm finally back.
And I think, you had some fun, huh?
Yeah, it was great.
DG, but just I'll go to you, Estelle, but I know that you guys, Ryan especially, you're looking for a breakdown. I forgot where in EG, but we're lower today. Are you getting that breakdown you were looking for? I think Steve said a rectangle, or you need new lows. Do you need new lows?
I need this 80 level to break, to properly break. That's my. I mean, I'm short a bit more now because I went long on the first test of 85 last week.
Right.
Took a few pips, but then I reversed the rest into a short at 85. And it's just not breaking this bloody level, and it's getting on my nerves.
Ryan, I think it will, and in my view, is still that we're going to get 83s, and that's where I think I'm going to be getting long for the first time in ages. But yeah, I think it's going to break. Yeah. Anyway, famous last words, but I do think it will.
If we trade 87 come Tuesday afternoon, thank you very much.
Yeah, most likely.
So think of metals here, Stell.
What do I think of metals? Well, my medium-term view, I stand by it, but we've said this for weeks, that they are looking vulnerable. They're not performing as they should be. And, frankly, they should have performed a lot better with these hugely negative real yields that we've had. And it's worrying that they're underperforming, but I think, you can't escape fundamentals and economics 101 at the end of the day. So I think eventually they're going to go a lot higher, but in the short term, I'm not, I have just under half the position I want, and I'm not adding any more because I think there's going to be another flush.
Okay.
But I'm going to add either way. If we get a flush, I'm going to add. If we start breaking higher, break some key levels, I'm going to add higher. I don't mind where I add. Obviously, it's better to add at better levels, but if we break, we break.
Yeah, and the dollar index last week had an inside week, which means it was inside the prior week's range. And the most bearish thing the dollar could do is take out this 94.50 level and then start taking out last week's lows, which about 360, and negate the breakout. And then I think you could have a decent pullback in the dollar. In fact, I think that's might be the only thing that, if you're looking for new highs in the market, eventually, I don't think it does it with the dollar exploding. You would think the dollar would come off a little bit to support it. What do you guys think? Maybe it doesn't matter anymore. Maybe the market could break or rally with a strong dollar. I mean, the correlation between yen and gold and silver the last few days seems to be disconnecting.
Well, in the short term, I think any correlation can disconnect, but in the medium term, they're going to have to. They're going to have to remain the correlations. So remember, we do have the FOMC minutes this week. So that might be an interesting day, in terms of market movement, but it's going to be probably a little bit quieter than last week. We get PPI as well, and inflation is still rising. Look at oil.
Yeah.
When oil is rising, the cost of everything rises. End of story. So, and this is going to get passed over. And you remember, guys, a couple of months ago, when was it? 2-3 months ago, when I was saying here, look, I have these ship owner friends who are telling me this thing is going higher and higher, and it's going to stay and it's going to persist. And they were putting their money where the mouth is. They're buying ships, they're doing stuff, and they're still telling me the same. So I think this is going to be a lot less transitory than central bankers think. And the other thing, I posted on the chat room, and a lot of people have been talking about this, is, in what way does tightening actually help the supply chain problems? You tighten because you have inflation. Yes, okay, you've tightened 100 basis points. Now everything is moving. Of course not. So, our friend Simon says, eventually you tighten enough, demand goes to zero. but
that's what Volcker did.
That's true. But, at the end of the day, this problem is not a monetary policy problem, and they know it. That's a problem. That's their problem that they're facing. They know it. People are saying, "Oh, look at inflation. You have to do something." Well, myself included, I've been saying this, that they should have done something a long time ago. But the problem is, even if they do hike and tighten and do everything, it's not gonna fix the issue. So, and
Bailey's probably the only one of the central bankers who's actually come out and said, we're potentially looking at inflation that's not going to be as transitory as we thought.
Yes.
How about the globe-trotting, the central banker, Mark Carney, coming out and saying we should do away with the dollar? Have you guys seen that?
Did he say that? I missed that.
Yeah, he did. He said we should do away with the dollar.
And use what?
Yeah. I didn't read it. All I got was the headline. Did you check it out, Blake or Ryan? Did you see that story?
I didn't see that. Not that I make much of what Mark Carney says. He's not in a position to affect anything anyway.
He's who's he working for now?
Yeah, probably some bank. Some bank long cryptos.
Yeah. Good one.
Yeah.
Blake, how are you, buddy? Are you getting ready for the big week? So I know you wanted to sell euro. I don't know if it got up to your price after the NFP, but just look at the euro right here.
Good morning. Just doing one last thing. Sorry, guys. I'm just,
Sure.
I'll be right there in 1 second.
Okay. Anyway, I'd be careful with euro at new lows here because of this. That's all.
Yeah. One more thing we should mention. Norway, for people who trade it, CPI. Last reading 3.4%. Remember, their target is 2%. They've already hiked, and they've indicated they're going to hike again this year, December. Came in at 4.1% now, and we all know Norway and oil. They're interdependent, and the krona is actually weakening a little bit today, which is weird. So, what's the market pricing in terms of what they're going to do? Are going to hike once more and then be done. Either way, inflation is here and it's rising in Norway as well, and pretty much everywhere. So I am looking at Norway. I really want to short Euro Norway and dollar Norway, but not at these levels. So I want a nice bounce at some point. And
you better just back off, pal. That's back off my Norway. That's all I have to say about that. I'm actually still long the US dollar Norwegian krona. It's amazing. Actually, all I'm waiting for is crude to just correct a little bit. And if it does, theoretically, the US dollar Norwegian krona should, or Norway, the crown should fall a little bit. And, it's interesting that crude oil is trading above 82, or just was actually earlier this morning. We're trading, above 80, and the krona has not strengthened at all. Actually, the US dollar Norwegian krona is just sitting right around its 200-day moving average. Hasn't moved for like literally the last week and a half. So I don't know, man. I think you're gonna have to wait for that trade, Stel.
You know what? If you had told me before that inflation is going to be 4% and oil at 82, I would have said, dollar Norway's at 7 handle.
Yeah, exactly.
Yeah. So
Right.
I'm with you on that. You know, if I had to take a position here, I would probably, obviously, if I'd been short from way above, I would just run it. But if I had to take a position here, I'd probably be wanted to get long.
Yeah, and so I'm gonna show you guys a chart really quick, and just so everybody knows. I mean, I've been playing this thing on the long side, and I've played it 3 or 4 times on the long side down at these levels and done really well with it. Played this megaphone pattern you can see here. You know, obviously, if you listen to the daily analysis with us, if you're a ForexAnalytix subscriber, you know we've been monitoring that for a while. But notice how we're just right around the 200-day moving average. And so what Stelios is talking about, and we can actually look at this in better detail by doing this. Let's do this. I'm going to put up a fresh US dollar Norwegian krona chart that we don't really do any work on. You know, this is your daily chart, and let's kind of delete that, and let's match it up to crude just so you guys can see, you know, very strong.
Another disconnected correlation, huh, buddy?
Big time. I mean, what should be happening here theoretically is as crude is moving higher, the US dollar Norwegian krona should be moving lower, as this is you know, what is Stelios, do me a favor. Why does the crown go higher when crude goes higher, typically speaking?
Did you lose?
Well,
Did I scare him off?
one thing you got to look at is Norges Bank, or the government rather, because they buy NOK against the oil.
Yeah, and you know, I forget what the percent of their exports are is oil too. It's a huge it's like the country's biggest industry. And so it's one of those things where when you see, we couldn't hear Stelios said, "Can you hear me?" No, we don't hear you, man. We don't. We heard you just a moment ago. You fiddle faddling with he's typing to us, guys and gals, just so you. Stelios is trying to talk, and we can't hear him, which is interesting because we were just hearing him perfectly fine just moments ago,
hello?
right? Oh, there you are. Yeah,
I don't know what
there you
happened.
are.
My earphones were, my headphones. I don't know what happened, but anyway, I was speaking and you couldn't hear me. But basically, I was saying what you said, so.
Your headset implant came out. The one
my implant, yeah.
Installed.
So yeah, 20% of their GDP basically is on oil, and you know, employment is around oil as well. So there's huge dependence on oil.
That's like keeping like 20% of your net worth in Bitcoin right now, right? Something like that. Oh, sorry. Did I say that? I don't know. I didn't. That one just kind of slipped out. Okay, but that is kind of what it is. It's a really, for a country, that's a huge amount of its exports. So you can see why it's so closely tied to crude oil, right? So again, this is one of those conversations that that Stelios just said, hey, if I thought, you know, here we'd have crude oil, you know, trading over 80, and you know, there's no way that Norway would be sitting here. And actually, I don't think that was the right chart, by the way. Hold on, let me pull. Oh, that was a WTI offshore. Sorry, hold on. Here's the oil futures. Dang, what was I thinking? Here we go. Let's do the front month. There we go. But still, that's actually not even a good chart to use. But anyway, I think crude oil is very interesting where we're at, and I'm going to try it one last time. Let me see.
Yeah, because last time crude was up here, look at where the NOK was. It was 12.
I'm sorry, what did you say?
Last time crude was up at these levels with this chart.
There we go. Better
NOK
chart.
was 12.
When crude was up at these levels, let's see. Yeah. I mean, well, actually, you can see right here the last time crude was at these levels.
Yeah.
US dollar Norwegian krona was at 6.5. And so, you know, that's why Stelios said, hey, if crude oil is where we're at, if you would have asked him or told him that crude oil was going to be at 82, he would have said that, we would have been trading at a 7 handle, which is exactly, if you look at this chart, this is the right chart, by the way. You can see the mirror image, right? So that's exactly it. And that's one of the things that you have to imagine, that anybody that's long Norway right now, based on crude moving higher, people are automatically going to be buying Norway. They buy it. Portfolio managers are going to be buying it. Crude's going higher. What assets can we be buying right now to take advantage of this crude trade? And then what happens? This is what happens with portfolio managers is when they feel that crude's move is over, or at least, near term it's over, they're going to turn around and start looking at what assets aren't working. What did we buy in our portfolio that is not working? And a lot of them probably look at Norway and say, this hasn't yielded us anything. And here we are around the 200-day moving average and, blah, 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 blah. And then they'll start to take off some of those trades that just haven't been working. And one of them would be Norway. And that's why I think it's really important to keep an eye on it. And that's why I continue to keep playing it on the long side. I keep buying it down I've bought it at the 200-day moving average like multiple times over the last several weeks. And then, I own it right now, and I'm barely out of the money at this very moment. And I'm just sitting here. I just sit here in the trade. Crude pulls back a little bit. Dollar NOK's probably going to pop right back to 865, 870. But anyway, that's how I'm playing. Now, I wanted to show you guys some of these yen pairs. Did you guys? I know you talked a little bit about it, and Ryan, you had the perfect analysis of the dollar or of the yen. When the dollar yen rips up like this, what's the first thing that people start doing? They start making these outlandish projections, right?
Yeah.
But is today different? Is this different? Or is this different? And the reason why I ask, is this different because we actually are probably going to get a yield move reflective of this? So what do you think?
That's the question. This is coming without the influence of US yields, which obviously closed today.
Yeah. I mean, you got because you asked about Columbus Day, by the way. Most banks are closed. My kids got what we call fall break right now. They do a fall break and a spring break because their summers are shorter here. So they give them random days off throughout the year. So my kids are on fall break, but the ones that don't have it do have today off. So there's no school. So you're asking about the US, and a lot of us we go like plant American flags out in our front yard. I'm just kidding. We don't do that, but no, it's a Columbus Day holiday. Banks closed. Kids are usually home from school. Parents get to pull their hair out. So we have today where yields aren't moving higher because the bond market's not moving, but you got the dollar yen breaking out. And as Dale pointed out, rightly so, stocks are weaker. So what do you make of all this?
Yeah, I mean, as I said earlier, it's looking very much a yen move more than anything else. Pound yen's up 200 pips since Friday.
It's huge.
It's massive. But where the other majors aren't moving alongside it, because we've seen it where yen pairs move and it drags the other majors. Euro's doing nothing, cable's doing nothing. Aussie's looking a bit bullish. So I'm a bit perplexed what's driving this right now without the influence of yields. I mean, we could have a situation where yields open up. And they'll be open at 12, I think, tonight when Globex reopens. And they could open up, sub 160, maybe down towards, 155% in 10 years. And you could see dollar yen come off 50, 60 pips in a blink. So I'm skeptical about this move at the moment on what it is and what it means. But I'm long, so I'm loving. My long-term longs. I'm loving it. I'm just
you don't sound as excited as you should be, because this is some pretty big moves, man.
Oh yeah, I mean, I took a bit off my long-term long at 1280. Yeah, 1280 this morning.
Oh, that's why you're so bummed out.
I'm waiting for. I shouldn't say it because it's not here yet, but I'm waiting for 1310 because that will give me 1,000 pips off my lowest entry last year.
Well,
Could
a couple
I say
comments.
something about just being happy about a winning trade. And, you know, if you are happy about a winning trade, you're going to feel dejected with losing trades. And it's some place I'm still trying to get. And where you want to be is it's just another trade.
Yeah.
Where you don't get elated when you're right and you don't go fetal when you're wrong.
Exactly.
Yeah. So
I'm short. I'm short dolly in at 97 at the moment, just on a big figure scalp. So I'm on both sides. Most
of the really, really good traders that I know don't get super excited about good or bad trades. They're indifferent. You know, it's like it's just part of a job. So it's like
right.
You know, I was just giving Ryan more crap because he sounds so down this morning.
But most people are like that, Blake. I mean, they're happy when it's working and they get very depressed.
Oh,
I know. I felt that way. I'm that way.
It's the newer traders usually that are just like very, very, you know, I mean, it just happens, you know.
You got to take the emotion out. You got to take.
Yeah. Oh, totally. Yeah. And like I said, the best traders, most of the best traders that I know are very non-emotional people. And when they're trading, it's just, you know, it's just part of what they do. Hey, I want to just point out, or a couple of comments really. Corn Odd said Japan's also a big energy importer. Part of this move could be importers pressing a few buttons. It's possible. God, you know, I would hate to be Japan and just being reliant on everybody else, especially in a world where, you know, commodities are ripping. God, it's got to feel pretty, you know, when you're really dependent on the rest of the world for your energy. God, it's got to be tough.
That's K-Man, by the way.
Oh, that's K-Man.
Yeah.
Oh, then I mutilated his name. God, it's horrible.
Pretty
me.
Much, yeah. I mugged him off for being Belgian.
Hey, K-Man.
You just insulted his whole lineage.
I probably totally did. You know what? He can just say it. He just Americanized my whole name. So that's what he could say. Kevin said, could it be that the Chinese holiday just ended? Could be. That's another, you know, possible comment too, that, you know, having you know, the Golden Week wrap up on Friday, maybe there is some leftover you know, leftover order action taking place. Who knows? But I want to point out a couple of these yen pairs. It's something I wanted to talk about. So you know, here's a sterling yen, and it broke a triangle. Now this really isn't a triangle, and the reason why I say that is because you know, the apex never built up enough. So here we are at the 78% retracement. I was, you know, drawing this little kind of butterfly pattern. 78% retracement. We're past the 127% extension right now. Could stretch our legs a little bit further. You know, I look at the guppy, you know, over the course of the last couple months, it really hasn't gone anywhere. So I can't get super excited about where we're at right now. The Aussie yen, though, this is a speaking of Gartley pattern, we just broke this, you know, descending trend line as well. And if you want to take the high that was put up in May to the low here, we're also at the 618 retracement. And that's kind of what I wanted to show you. Now, obviously we're overshooting right at this moment because you're probably getting a lot of people getting stopped out right now that are on their shorts, but we're above the 200-day moving average. You know, that has capped us for quite some time, really. If you look back throughout the summer, that 200-day moving average played a big part in price. So we're well above it, squeezing everybody out above the descending trend line. You know, it's going to be interesting to see if we can stop here at 83. I think we're going to hold up here at 83 intraday, but we'll see. Kiwi yen broke out of this triangle as well. These are triangles we've been monitoring over the last week and a half or so. And here's the Canadian yen. This one, if you listen to the week ahead video, I talked about how I played this and I went, you know, dipping my toe back into the warm water. I'm like, oh, look, the water's so warm. I'm going to dip my toe back in. And then a shark bit off my foot. So if you guys did not listen to the week ahead video, that was posted on over the weekend, I talked about how I traded this poorly. I, took a short right here, made 50 pips, started shorting it again on this bounce, and then ended up taking a net loss once we rallied past this wedge. I almost said it, and I shouldn't say it. Like a noob. But now let me ask you this, Ryan and Stelios and Dale. How many times do you make newbie mistakes 20 years down the road or longer?
Oh, all the time.
Well, several.
Yeah.
Still.
Yeah.
And so that's the thing I was trying to point out on the week ahead video. Like, look, here I am 25 years later, still making mistakes. And you have to realize, as a trader, you're always going to be. I haven't actually met one trader that doesn't make mistakes. And anybody that tells you different is 100% lying. I traded with some of the best on the street for years. All right. And I'm going to tell you right now, because we're all human, what happens is, you get comfortable. Everybody gets comfortable. One way, shape, or form. Some people are just poor traders and they just make mistakes all the time and they just never get it. But the ones that get it, you lax your rules. You put your guard down a little bit. And I was getting a little high on my horse. Last week, I've had a really good gain over the last, let's just call it month and a half, percentage wise for me. And I felt when I got run over here, that I think was really just a product of me getting a little too comfortable with what I was doing, and I kind of laxed my rules. So anyway, it happens to the best of us.
Yeah, Ziggy says it's okay to be wrong, just not okay to stay wrong.
Yeah, that's something I've been saying probably for the last 10
he got
years.
it from you.
Yes,
Yeah.
and the thing one last thing, and Ryan, I didn't mean to cut you off. One last thing I want to say is we're always in a constant learning situation. That's what we do as traders. But by making a mistake when you trade, if you learn from it, what it does is it prevents. Well, for me, it will prevent me from doing that mistake, that specific mistake, for a certain period of time. And the more that happens to you, the longer those periods tend to be between trades. So by making the mistake that I made, it's like, stepping back into that, I may not make that trading mistake, let's just say, for the next 6 months or a year. But, if the first time I did it, I probably did it again, 2 weeks later or 3 weeks later. Does that make sense? Anyway, Ryan, you were going to say something?
Yeah, just quickly to what you're saying. One of the biggest things that catches traders out is that complacency, and Dolly Yen right now is the perfect case. We've been sitting in a tight range, 109, 111 for months, and you trade the edges, you play around with it, and then it breaks and you think, it's broken a bit. Okay, I'll sell it. And then it carries on going up. All right, I'll stop on that, but I'm going to sell the top again. And you keep looking for tops because you think the last few months is going to carry on as it was. And then you find out you keep getting run over. And it's like changing that mentality and saying, hang on, something's changed. What I was doing before isn't working. I've got to change or not, or I'm going to keep losing money. Right.
Exactly right. That's exactly right. So anyway, and look at the dollar yen ripping right now.
Yeah, just taking some off 113.10. That's me 1,000 pips in the bin.
Nice. Very good. All right. Dale, I know you have an interview. I'm sorry to run into that. Hey guys, thanks for everybody for stopping in today. Appreciate it. And Dale's got a great interview coming up with you. So make sure you guys stick around. It's all yours, Dale.
Thank you, buddy.
Thanks, Dale. Ryan. Coach.
Thanks, Ryan.
Thanks, everybody.
Bye,
Thanks,
guys.
everyone. Mike Zaccardi, welcome back to Face. How are you, my trading warrior brother? Been watching your tweets.
I'm doing well, Dale. How are you?
Doing okay, brother. So we're at kind of an indecision point in risk here. You could share your screen with the green box, Mike, if you want to show anything.
Yeah, I don't have anything to really show on my screen, but I'm happy to talk through.
Okay. All right. Well, I'll take the screen.
Sure.
So tell me where you're at after the recent 7-8% pullback and NASDAQ acting much weaker then the S&Ps, where's your head at on the markets and risk?
Yeah, well, if we just take a step back and consider the last year and some of the trends that have been going on, we had that big move in value stocks that started just about a year ago, and those rallied through the springtime, and then we had a big Q3 pullback in value stocks and really yield sensitive plays, with the Delta variant kind of being the reason for the pullback in some of those COVID sensitive names. And now we're getting a resumption in that. And of course, the market narrative is, what's going on with energy prices and interest rates. That's really lifting energy and financials. So there's always a narrative for it, but I think big picture, we had a correction in what was working during the end of Q4 last year and Q1, and now we're getting a resumption in that. So to me, it makes
So you mean the mega cap? Because the mega cap stocks for a while went into kind of like hibernation for, just moving sideways while the rest of the market was moving, and then everyone went back to the FANGs, and now the FANGs actually, there's lots of negative action. I mean, Apple has come off quite a bit from rising wedge. It doesn't look like that on the weekly, but there's a daily that looks negative. Microsoft's trying to recover off major support. Netflix has really been the strength, and it's even diverging here. So what area of the market do you like? I mean, oil has been the superstar, right? Anything oil related?
Yeah, energy and financials have definitely been working. And what's really impressive about that, especially for energy, is what's going on with the dollar, which you've been talking a lot about here since the top of the hour. The dollar's been generally rallying, and we're seeing energy prices still move higher. So, if we were to get any kind of dollar pullback, I mean, look out when it comes to oil and copper, for example. Now, things like natural gas and coal tend to be a little more energy fundamentally driven, not so much dollar driven. So those may diverge a bit, but if we do see the dollar come off a little bit, boy, that could seemingly have some very bullish implications for oil. And as oil climbs, we get near that $100 level. It would first be on Brent and then on WTI, and that would certainly drive a lot of media coverage and interest among retail investors. So that could become the main story. So we'll see how that plays out.
So if I came to you, Mike, and said, I have 100K, I'm in cash, what would you be telling me to do? Just sit on my hands for now, or deploy it? Where would you deploy it, and how much? Would you keep a certain percentage in cash? I don't know what you think about the bond market, but it's been under pressure. Let's just make believe I'm a client, and you mainly write. You don't manage money, right? Just trade your own account, and you write for a lot of different websites. More of an analyst role than a advisor role?
Correct. Yes, I do a lot of writing on markets and personal finance. I do a lot of writing at top-down charts, which is a popular macro event-driven charting website for traders.
What's your top chart and top-down chart?
Let's see. What did we talk about recently? Well, we had a piece a few weeks ago on bullish stance on banks, which looks to be a pretty good call. We also did one recently on the comeback of value stocks, which is a lot of what I've been talking about in this recent resurgence. So that top down, we're pretty bullish on that theme of value, cyclicals, energy, financials, that area of the market kind of perking up here. And now that it's gotten some momentum, we think that will generally continue.
Okay. And any view on precious metals or the miners? They're awful cheap. they haven't really done anything except grind lower. But do you know, with what you're talking about with higher yields, that could be one of the reasons they're depressed. But do you think that they could be close to putting in some type of low here?
Well, we're at a real key level on something like GDX. If you look at this sort of 29 to 31 zone,
Yeah, I
it's
do
been,
have it.
yeah, it's been historically rather important. So for now, it's holding. And if you look at the weekly chart of GDX last week, it wasn't the most terrible looking candle,
No,
actually.
nice candle.
Yeah, it did pull back a little bit Friday afternoon, which wasn't the best. You know, I tend to think of
That's because gold pulled back from, I mean, gold had a wild day on the NFP. It rallied up here and gave it all back
yeah,
Friday.
yeah, kind of classic price action on gold that we've seen in the last year. But yeah, for GDX, you know, that week settle into the close wasn't the most encouraging thing, but for the week, you know, finishing higher and seemingly finding some footing around this 2930 level is somewhat encouraging. But boy, you know, there's a lot of, as we CMTs like to say, there's a lot of dead bodies hanging above current price. You know, there's just so
Okay.
much selling pressure that may come into play on any kind of rally just because the grind lower in the last 14 months has been so severe. You know, GDX rose above, I think, $40
Yeah.
in the summer of last year. So it has a lot of overhead supply that it may have to deal with on any rally.
You know, besides the oil, the natural gas stocks have been on fire, E&P, and looks like we may have had at least a temporary top in nat gas heading into winter. Yeah, anything? Are you focused on that area at all with
Yeah,
what's
definitely.
happening?
Yeah, I actually spent 6 years in the energy trading and risk management world, and it's still something I keep a very close eye on. And you know, here we are right now on natural gas. It's been very volatile of late. I'm showing prompt month, which is November natural gas at $5.61, which is off the high, but up more than it's more than doubled in the last year. So
Yeah.
we're seeing a lot of volatility there in the gas market. You know, fundamentally, a lot's going to depend on both domestic and international conditions. You know, how cold is it going to be in the first part of the winter? As of now, you know, it looks like a somewhat mild forecast is in the cards for Europe and Asia, as well as the United States for the first portion of winter. But I've been reading some things that suggest the back half could see some colder risks, which of course would be bullish for natural gas.
You have a view on crypto, Mike?
Yeah, you know, I think crypto has seen a lot of buyers step in on these pullbacks. I mean, the pullbacks have been violent when they've happened, but you know, just take a look at, for example, that news in China just in the last few weeks, quote unquote, you know, banning Bitcoin, which they're wont to do. We saw a dramatic pullback immediately, but then buyers stepped right back in. So there's so much buying activity that seems to come in once we see these pullbacks. So to me, the momentum is on the side of the bulls with crypto. Next stop has got to be this mid 60s level for Bitcoin. Those peaks from
right here,
Q1, Q2. So that'll be in the area to watch, and we're getting right there now. And then it's also to pay attention to, you know, what's going on with Ethereum and then some of the other smaller ones too.
There's
because
Ethereum.
We've tend to see some rotation among individual cryptocurrencies, sort of like stocks. I mean, you can almost consider these the new stocks, having a more than $2 trillion crypto market cap. While it's still small compared to the global equity and fixed income markets, you know, individual players here, you can consider them just like stocks and how they trade. So yeah, momentum seems to be on the side of the bulls, and just keep an eye on relative strength among individual cryptocurrencies, and those could be the ones to play, because we could see a certain cryptocurrency make new all-time highs while Bitcoin doesn't. And of course, the media will focus on Bitcoin, but there could be other stories at play that are the the emerging cryptocurrencies.
Okay. Anything else you want to wrap it with, Mike?
Let's
And
just
do you have a service or no axe to grind as far as looking for subscribers or clients or?
yeah, not too
you're
much.
not.
I mentioned top-down charts. Callum
Right.
Thomas did a great job there. Wall Street Horizon for traders who are looking for corporate event coverage, which really drives price action in individual stocks. And then I also write personal finance items at Humble Dollar. And then I also provide services for financial advisors on the analytical and writing side. But that's kind of my game right now.
Okay.
I would just button it up with taking a bigger picture stance in the market. This year has been a year of such positive rotation in the market. I think we've seen these periods where mega cap tech has pulled back, at which time value stocks outperform, and vice versa. To me, these are signs of a healthy equity market. So I don't expect a sharp drawdown anytime soon. We would have to see deterioration in several different groups, which are just not seeing yet. We're seeing traders move to one piece of the market to the other. And to me, and putting my technician hat on, that's a positive sign for equity markets.
Yeah, there's the S&Ps right there. Looks like 4360, pretty important support level after the recovery last week.
Yep.
Back under that, maybe we get a retest of the lows or another low, 4260 or so. So, Mike, I really appreciate you taking time on a Monday when we're all trying to get our sea legs back on the market and sharing your views with us today.
My pleasure. Thank you, Dale.
And you could follow Mike at Mike Zaccardi. And here you go. Here's Mike. And just like it sounds, MikeZACCARDI. And recommend that you follow Mike. He puts out some very interesting tweets on Twitter, and they'll keep you abreast macro-wise. So appreciate you being here, Mike. Thanks for having a giving spirit and showing up today.
Thank you.
So that's a wrap, everyone. Still kind of a quiet day, but I'm sure that we're going to get some action this week with the numbers. Again, here's the S&Ps, pretty important line here at 4358. It's rallying back off it, and I hope everyone has a great trading day, and we'll see everyone tomorrow for the Turnaround Tuesday session. Remember, don't just count your pips, count your blessings. And you could join the team at 15 after the hour for the morning edge. And with that being said, thank you everyone for your attention. Thank you, Mike Zaccardi, and everyone have a great day. Thank you, Mike. Adios.